Good day, everyone. It's finally Friday, and it's been one interesting month, to say the least. We had Syria, the stimuli program, and now the federal budget, all in one single month. Let's start off with the fundamentals, as we usually do, and work our way into the technicals from there. The markets are softer today, as investors are very focused on the risk that the U.S. government will not, I repeat, will not be able to pay its bills after hitting its borrowing limit next week. The U.S. will exhaust its borrowing authority on the 17th of October. Also earlier today, a government report showed that income and consumer spending grew slightly last month. The increases suggest a growth that's not strong enough to accelerate the economy. U.S. personal income rose last month, official data showed. U.S. consumer confidence declined this month as Americans turned more pessimistic about the economy, including their own finances and the government budget policies. The University of Michigan said that its final reading of consumer sentiment dropped to 77.5 in September from 82.1 in August. This was the second straight decline after confidence reached a 6-year high of 85.1 in July, and that was very high. The first market I'd like to look at is the broad market. All week I've been getting negative and more negative about the broad market, and the only thing that kept me somewhat neutral was the fact that several subsectors and indexes were still exhibiting a lot of strength. But nonetheless, today we finally see the broad market break down to a lower level. Let's see how the other sectors are doing and if they're in fact softening up as well. As far as the S&P index, I still think we have a soft landing at the 1680 level. And once we get there, I will analyze the rest of the market to see how we're looking then. For now, keep your target at the 1680 level, which is not far away, and I will update you when any change to the current market environment occurs. And while the Nasdaq 100 is still fairly strong, one huge sign that the party to the upside may be over is the breakdown in the semiconductor sector. If you recall, this subsector is very sensitive to key market turning points, and it was the strongest sector on the way up. While there are some sectors and indexes that are holding on, we're definitely starting to see some more downside trading and additional weakness that we started in the beginning of this week, and I alerted you to that. The next target on the semiconductors is 3850, and this is where we should be focusing right now. Just to show you some further evidence that we are weaker across the board, the transports, which is another subsector I like to look at during crucial market swings, is showing us that weakness is fairly broad. The next level, which is also the 50-day average, is the 116 level. It's fairly close and is less than $2 away from our current level. So unless we have some positive news from the Feds about the budget, we are more likely than not to hit this area sometimes in the beginning or middle of next week. Moving away from the stock market and looking at the foreign currency sectors, the euro currency gained after a report showed economic confidence in the eurozone increased more than anticipated in September. The euro has a classic flag pattern formation, and what I like about this pattern is that its trading range is maintained very close to the upper part of the trading channel. This is a very bullish indicator and something I really want you to pay attention to. When we break out or rally strongly and maintain the trading range near the highs of the area, I always anticipate a real breakout following. Most of the time, if you recall, when markets break out, as soon as the momentum ends or fades, they go right back down, but sometimes, not very often, they stick to the top of the range like a magnet. And this is what I'm seeing here. Pay attention to these type of patterns because they have very good chance of working out. For now, watch the euro for a breakout above the current high of around the 1357 area. The British pound gained after a report showed UK consumer confidence advanced to its highest level in almost 6 years in September, while labor productivity gained for the first time since 2011 in the second quarter. In addition, the pound was also supported when Bank of England Governor said he does not see the need to expand the central bank's quantitative easing program in light of the current economic recovery. Technically, the pound is once again trying to test the old highs. We have a double top and a 1-2-3 pattern, and if we go up just a bit more, we will take out the old high level. The RSI is once again getting close to overbought levels. If this is it for now, we may have another pause in this trend. While I do believe we still may have upside, I warn you to be cautious taking long positions at this time. The market can only sustain so much upside, and most of the fundamentals are already on the table. On Monday, we will have a much better idea of what we're dealing with, so let's wait for another few days before making any commitments to this market. Lastly, let's take a look at the crude oil market. Right now, the crude oil market is creating a base above the 100 area. Technically, it's a bearish flag pattern. Remember the rule, the longer the range-bound cycle, the better the breakout will be. So right now, we're waiting for a breakdown. If we move down quicker with more momentum, I would expect a pullback. But the move down was deliberate and slow, and more importantly, we're staying near the lows. This tells me that what's happening is based on reality and not panic or a reaction to something quick. Syria is pretty much forgotten at this point, and if we don't hear much about global demand for the next week or so, the chances are higher that we will be breaking down from these levels further. There's a tail gap to the upside for Monday on Lumber Liquidators, a very popular flooring store in the States. Place a long stop 25 cents above today's high, and if filled, place a sell stop 20 cents below today's low. It's a high-priced stock, so we have to give ourselves a bit more room to the upside and downside. That's it for today's tutorial, and I will touch base with you Monday midday or earlier if I hear anything about the government shutdown. That's the focus right now. Have a great weekend and try to forget about the market just for a few days.